Alrighty, good evening. Welcome, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 21st. This is Thanksgiving week. If I was to ask you what happens in the market on Thanksgiving, what would you be able to tell me? What would you be able to tell me on the cycles or what typically happens during this week? Lower volume. When does lower volume kick in? When does lower volume kick in? Today. That is an interesting answer. I didn't think so, but you know what? I didn't check. On the Dow, it looks like average volume. A little bit lower on the S&P, a little bit lower on the NASDAQ. So I'm going to say lower volume every day other than Monday. Monday, I feel like it has average volume. It was a little bit less, but it has lower volume. What else can you tell me about Thanksgiving week? And I gotta get it open. SPX volume is now 2/3 of last week. So options volume. So I should do it this way. Stock trading. I was going to go over that, Abraham, but you beat me to the punch. Lower by 2/3 option trading volume. So it may be hard to see things shake out. Awesome. I'm going to say Black Friday. Can't spell. And Cyber Monday happen with results out next Monday on Black Friday retail sales. Awesome, Russ. Good answer there. Anything else? Market closed on Thursday. Love it. Love it, love it, love it. In fact, David, if I can say something, a lot of us go to Seeking Alpha for articles, and it seems to be the #1 site for everyday people writing articles on or about the stock market. Something we have to remember, and we don't do a good job, is half to 2/3 of those articles written by non-professionals are garbage. They don't have the correct information, even though they think they do. I was looking today for the calendar, and you're going to see here, it says Seeking Alpha. I was just looking for the stock market calendar. I verify everything, right? I trust but verify everything. So I clicked on Seeking Alpha just to make sure that Thursday is a day off. And I know it is. I mean, I've only been through this 30 years, right? Yep, there it is. Thanksgiving 24th. And of course, Friday, stock market closes at 2 p.m. Eastern. It's a half day on Friday. Will someone please tell me what's wrong with their 2022 stock market holidays? And this is their main website. This is not the people that they allow to throw articles up. I mean, they don't fact check their articles. 2/3 of their articles don't have the correct numbers on it. But what's wrong with the main site's holidays? Nobody knows? Anybody? David, I'm kind of picking on you because you brought it up. Okay. I'm going to tell you, but I think I got you. When does the half day close on Friday? For me, being Mountain Standard Time, it's always been at like, it's been at 11 o'clock, which would be 1 o'clock Eastern Standard Time. It is not 2 o'clock Eastern Standard Time that the market closes on Friday. It's 1. So just something to keep in mind. Friday is a half day closing at 1 p.m. Eastern Standard Time. They blew it. They absolutely blew it. There is no volume Wednesday and Friday. What does that mean if there's next to no volume? What do you think that would mean if there's next to no volume? Russ, you should know this. We went through this years ago. Abraham, you too. Dave and David, we've talked about it. I don't see Mary here today. William? Okay, a couple question marks coming in. So what it typically means, it won't verify a trend. And really, this is just common, right? It's very likely, it doesn't mean we're going to take the days off, but it's very, very unlikely we're going to place any trades or adjustments to current positions Wednesday or Friday, and most likely not tomorrow either. We just don't see it. There's not enough volume to warrant a trend change or a trend confirmation. It's just retail traders kind of screwing up the market when they don't know what's happening. And usually Wednesday, all economic reports come out. So just some things to remember to keep in mind. All right, here we go. Big announcement today. Anyone know what the announcement was today with Disney? Anyone know what the announcement was today with Disney? Maud, great to see you. Thank you for showing up. Still don't have everything fixed with everyone. I should probably just text you. Hey, don't forget. Iger is back. Let's say Iger is back, or the person who put into place a $200 stock price took over the CEO position. So thinking about it, what are the thoughts there? What does that mean for Disney? And I'm just kind of thinking out loud here. I don't know if there's any real answers. Thank you, Maud. What does that mean for Disney? So the three of you, Chapix is fired. Yes, of course. Maybe the magical kingdom becomes magical. I hope so. William, yours is the best. $200 stock price again. Yeah, it may be. But here's some of the things that just came to mind for me, right? Cleaning house with new director slash media department. The way that they set up their new division, right? Totally screwed up the way that you look at the accounting and how different divisions make money. They used to in the past just put it all together, and they kind of pulled an apple and tried to break it out. So now there's another division and another section people can pull punches on and look down on them. Chapix did a great job in the parks, but the Disney Plus most likely will go back to the cheapest media around. Yes, it's going up to what, $7.99 or $10.99. I don't remember how they're doing it, but Iger was smart enough to understand it's not necessarily about the money brought in, it's about the millions of subs and what you can do with that information. So it'll be interesting to see how that goes around. Also, more importantly, Florida probably going back to the way it was with Disney. Remember, they're somewhat in a battle with the crap that they pulled with the state of Florida. They're going to lose their special license. Not that Florida can afford, or those two counties can get rid of Disney and fund all the paramedics and police and infrastructure and blah, 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 blah. It just isn't possible. But you're going to see Disney probably kiss their butt, and they're going to most likely make some hefty contributions on all sides of the aisle for their politicians. Yes, they're going to buy their way out of the problems in Florida so that won't be a hangover for the company. And last but not least, the debt they incurred is already bleeding off. But Iger will most likely make it a priority. That also means the purchase of the 33% Hulu stock that Comcast owns. So they're going to put their debt as something that they're going to work on, and we'll mention it. With that said, they will also make sure that they repurchase that other part of Hulu so that they basically own the whole thing. All right, let's see what else I have. Kind of interesting. We're going to talk about timing. A bunch of you asked last Wednesday, why are you placing puts? And again, it was kind of funny because let's face it, looking at a chart, it was last Tuesday actually, Monday, Friday, Thursday, Wednesday, Tuesday, Monday. So it's right there, right? Right there. We started protecting last week. And it was interesting because the comment that everyone made to me, that's not fair to say everyone, and I should look at the S&P 500. The comment was, Kevin, what are you doing? Well, the short answer was I was somewhat preparing for this week. But really, it's just technical, fundamental, sentimental analysis. We weren't overbought. We did hit a pivot point last Friday, 2 weeks ago Friday, and then we were coming down and we fought it, right? Overbought for institutional money, and we were basically flat on Friday. Technically speaking, I was using the pivot point and the fact that we were close to the 200 day to start getting protection back on. And again, I got quite a few calls on Tuesday because the market was up. Oh, what are you doing? You're putting protection on. And it really is just technical analysis. It's sentimental analysis. It's actually the week before Thanksgiving that we usually have a bit of a pullback. We happened to break the 50-day, and we went from 37.87 all the way up to 4,000. I mean, that's a pretty hefty pop in our stock market. Yes, on the 5 1/4 day, we were up 5.75. On the 1% day, we were up 2.5%. We did a great job of capturing the bounce up, but we went back to protection. And it's not rocket science. In fact, it goes back to all you who have had education. It goes right back to level 1. We're using technical, fundamental, sentimental, and/or tendencies, market historical patterns, to make our decisions. I was a little shocked after almost a 10% move, why people are sending some emails and placing some calls. We had a 10% move. We're going to go back to a profitable year, even though we're still down, 18% right now on the year. It's like, come on, guys. The S&P doesn't work that way. Last time we were only 9.5. We rebounded almost a full 10%, and we got it out. We got it ready to go. We made sure that we are, how do I say it? We just made sure that we were protected for what we had coming up. It's level 1 educational stuff. And I don't mind you asking for learning, but it's kind of funny because when most people spend money on the education, they jump into the trades. And I know some of you, I mean, I call this my educational group, right? A lot of you have taken education with me. Some of you have been taught by me. It's amazing how much of the basic level 1 stuff that people just pass over is missed. Yet then they ask level 1 or uneducated questions. Now, we do have some people here. If I went through, I'm pretty sure, Dave, you have not had education. Jim Bosserman, I'm pretty sure you haven't had education. And for especially you two, I'm not saying don't ask me questions. That's not what I'm saying. I would expect you and want you guys to ask me questions. But some of you should know better. And it's funny because Maud just jumped in here and said, emotions get the better of us all the time, which is really simple. I agree. Emotions do get the better of us a lot of the time. But this is level 1, basic, the most basic of the basic of education is what made those decisions, or made my decisions, on why we started to protect last week. That's why I'm doing what I'm doing. And I found it somewhat simple or easy just to say, hey, you know what? For some of you, I know I told you, go back to level 1. You've been taught this. Look at technical analysis. Look at fundamental analysis. Look at historical cycles or tendencies this time of the year. That's why I'm doing what I'm doing. The easier way to look at it, the last time the market rebounded, it was 9.5%. We fell right just a smidge over, 9.6 or 9.8. I don't remember. But we're in that range that the market said, hey, we're going to take a breather and we're going to sell some off. That's why I'm protecting. All right, let's see what I have last for you for this week. Last but not least, Visa, what are you doing? Those that own Visa, they're like, no protection. Out of everything, you didn't protect it last week. And yes, no protection because consumer spending was up, right? I'm going to put it like that. Consumer credit up. Seasonal. I should just say seasonal time of the year, right? Seasonal consumer spending. This is a pattern. It's usually up. So we have no protection on Visa. And yes, there's no protection on Visa. Looking at a chart, still bullish, not overbought. We have support at the 200-day moving average at 204.50. It was 204.51 today. We would expect a bounce higher. It's just, you know, stocks don't move just in straight lines. So out of all the stocks we chose not to protect, it's basically Lockheed Martin, Coke, Visa. Verizon's been down enough that it's not protected right now. Otherwise, core holdings are protected. When I'm talking about core holdings for Hurley Investments, Apple has protection, Boeing has protection, Bank of America has protection, even though it was up today. Baidu has protection for earnings tomorrow. Disney has protection way down at 91. We're looking at rolling that to 100. It got to above 100. It could not hold 100. 100 is a huge resistance level for Disney. Ford we have protection on. Google L we have protection on. JP Morgan we have protection on. Coke we do not. Lockheed Martin we do not. Meta we have protection on. Micron we have protection on. Let's see, still going through. Square we have protection on. Under Armour we have protection on. Visa we do not. So if you'll notice some of the themes there, banks, retail, semiconductors, and technology, very protective right now. I feel sorry for energy. Energy took a kick in the teeth today. Although it wasn't too bad, it recovered so much, but energy doesn't seem to have the promise with the Republicans having a red trickle. No red wave, no little red wave, no tsunami, no rushing river. The Republicans had a little trickle. Technical energy is going back down, and alternative energies will probably go higher. So that's what we're doing on Visa. All right, let's see what else I have for you guys here. I might have had one more. Earnings dates, we've got Baidu tomorrow. Interesting to see where we head there. And with Baidu, a lot of you are going, I can't believe you're still in that. Interesting article. Lockdowns are supposedly going to end beginning of the year. Blah, 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 blah. The short answer is Baidu is ridiculously undervalued. And it's the one company that seems to have integrity coming out of China. It also has, I mean, it basically says the other segments that it's in. I like it because they are IQ. They own 56% in IQ. They're part of Tencent. They own 33% of Alibaba. They have online cars. They're everywhere. In fact, in my opinion, Baidu is a much better index of China than you're going to see elsewhere. All right. And then we just have Costco, Dollar General coming up, and Micron coming up. Big picture, Walmart gave us a bounce last week, supposedly, right? Well, again, if you look at the chart, I really didn't see the bounce. I mean, if anything, the market was down last week, if not flat. It was down like 0.67%, so a little worse than 0.5%. The market was down. But Walmart did give us some very interesting views in regards to consumer spending. And it's shocking that Walmart did so well. I mean, it really shouldn't have. It doesn't make a whole lot of sense other than their grocery stores are doing really good. Food inflation is going to make them a little more positive. Let's face it, if we're really looking for something, we probably don't go to Walmart to buy it. If it's something that we want on our list, Walmart's not usually where we're going to get our computers. It's not where we're going to get our phones. It's just your overall, hey, get your consumer commodity goods place, right? That's where it's at. Commodity goods, boom, you buy it from there. Even meats. I mean, I know people that'll go shop at Costco and Albertsons for their meats. They won't even buy the meats from Walmart. But they hit on all cylinders. A lot of people said, hey, Walmart brought our market higher last week. That is not true. Our market was still down, but it kept us from being down 2.5% last week because it did so good. Do go through and read the impressions as I get this posted tonight. I thought their impressions were right on. In fact, let me go through a couple of those. What are the key takeaways from what we heard from Walmart? Consumers are feeling the effects of persistently high inflation, including higher income consumers. So they're seeking lower cost, and I've got that in the way, lower cost providers. Consumers are starting to spend more now on what they need as opposed to what they want. Consumers are increasingly price conscious and consequently are trading down to private brands. Consumers see cost benefits of buying in bulk, which is contributing to the ongoing strength at Sam's Club. Inflation is a global problem with the current high rates of inflation. It is not just an issue for low-income consumers. What are some of the likely outcomes in the next months? Growth will slow as consumers rein in their discretionary spending. Plus things are just too expensive anyway. Inflation should ebb, and as end demand weakens, at the same time supply chains improve. So we'll see supply chains improve as inflation goes down. Companies are going to start losing pricing power as more consumers of necessity refrain from paying full prices, which is just the recipe for continued a continued recession into next year. And yes, we've been in a recession since the first quarter of this year. Actually, it's the second quarter because it's 2 consecutive quarters. But we had the first quarter, second quarter were negative. Don't be surprised if we're still in a recession, is what I'm going to be telling you. Corporate profit margins should be under pressure, absent more aggressive cost-cutting actions. We've seen all these cost-cutting actions with all of the labor that they're shifting off of their expenses as they're getting rid of people. Great thing to do right around Christmas, right? Branded products should see market share erosion as consumers shift purchases to more private label generic products. This is in general. That doesn't go for Apple. It doesn't go for an Under Armour or a Nike. Concerns about job security should lead to more prudent spending behavior. So people are going to tighten their belt. I found that I've been tightening my belt more since my son's accident. And a lot of things that we wanted to get this year are just not in the picture because we're spending more money on medications and still trying to pay off hospital bills with crappy insurance, let alone all of the therapy that my son goes through. It's just ridiculous. All right, not much was in this one I was going to go over. Dow still bullish, but really close, significantly close to being overbought. If it couldn't get higher with Boeing's amazing results on their earnings, probably not going to go higher, probably going to head down lower in the near future, which is why this week I am quoting where the markets end this week. I'm going to say lower. I'm not sold that our markets are going to be going higher. S&P is bullish. No, that's the NASDAQ, excuse me. S&P is still technically bullish. Has some room to the upside, but I don't know if I see it going higher. And yes, the NASDAQ is now technically bullish, but looking to cross bearish again. We're just getting to that point. So it's a toss up. I'm still saying it's bullish. I'm not preparing it for to be bearish, but I do have our tech stocks protected. Still looking for overall growth rate of 4% in November, which means we'll get a little bounce at the end of the month for window shopping. Earnings, we have Dell and Zoom. Zoom did horribly. In fact, because Zoom, and I can't remember the other one that didn't do so well. I want to say it's Autodesk, but I'm pretty sure, and I'm taking a quick check, I'm pretty sure our futures are down. Nope, everything's up right now. They were down earlier with the Zoom and what have you. So interesting to see. Tuesday, Common Fitch, Best Buy, Burlington, Dick's, Dollar Tree, Jack in the Box, Guest, Hewlett Packard, Nordstrom's, VMware, Baidu, Wednesday's Deere. Although I thought Deere already reported, I don't know why it showed up as Deere. Economic reports all built into Wednesday. Initial continuing claims, durable goods, new home sales, Michigan sentiment. Half day on Friday, market closes at 1 p.m. Eastern Standard Time. I have some interesting articles in here that I thought were pretty fun for me to go over. Obviously, the Baidu one, I'll get this posted tonight for you guys. Bond recession indicator hits most extreme level in 40 years, raising questions about a stock rebound. The bond market looks awful. Bonds have lost upwards to 75% of their value. Well, Kevin, you know, Under Armour, Visa, Baidu, Disney, they're kind of in that camp as well to a certain degree. Yes, we understand that. Bonds just look awful. It blows me away. It blows me away. They call it disorientating. Do we just look at the results and you're thinking, my gosh, it's ridiculous. Yet Vanguard is telling you the 60/40 strategy is not dead and it'll work out again for investors. Even though they might have to wait 3, 5, 7, or 10 years to get their $1,000 back, and all those bonds they spent 10 grand on are probably worth somewhere in that $2,500 to $3,500 range right now. Here they're trying to push you back into bonds. In fact, I had a very interesting, and I'm keeping it right here, a virtual meeting with Guggenheim. Hey, with winding down 2000, if we're going to take advantage of some tax harvesting or taking some losses on a couple stocks to buy back in here towards the end of the year or in 31 days, you should talk to us about the amazing yields within the fixed income that they are seeing. Hey, set a time. What they're not telling you in this is, yeah, they'll still pay me 7% to stick you into something like this. It's awful. It's absolutely awful what they're trying to do. As I giggle and I look at Vanguard, which is supposed to be the safe, cheap guy, and Guggenheim, what they're putting out here, it's sickening because these people have absolutely ruined retirement for some people as they put them to an 80-20 where 80% of their stuff is the last 70-75% because it's bonds. They're screwed. They're just hosed if they need any of that money. The big short, Michael Burrow's current positioning, you have no idea how short I am. The gentleman that called the big short is shorting our market something fierce. It's unbelievable what he's in and what he sold off and how short he is. And then I've got the blind side Disney Iger saga listed here for you. All right, guys, with that said, any questions you guys have for me tonight that I can answer? Any questions you guys would like me to go over? Any thoughts that you'd like me to touch on? Any questions about portfolios? I will send out a, hey, here is here's our Thanksgiving towards the end, but anything you guys would like me to touch on that you are thinking about, that you've heard, that you're wondering, that I can answer for you. If not, guys, have a wonderful evening. Pleasure being back with you. We will not have the trade findings and adjustments on Thursday because that's Thanksgiving. And next week, I need to spend a little bit of time with my dad. He'll be back at the MD Anderson Cancer Institute, and I do what I'm supposed to do to be a good son. Plus, I love the guy. All right, I see no questions coming in. Guys, have a wonderful evening. I appreciate you guys being here with me. Hopefully this was helpful. I'm just noticing. Mark, is that you? Nope, Rich was there. All right, guys, hey, have a wonderful evening. Pleasure being with you. I will get this up tonight or first thing tomorrow morning. And do go over those notes. I think it'll be helpful for all of you guys. And other than that, I will see you guys next week. Bye-bye.